Hello traders, welcome to the weekly outlook and setups volume 282. Iliya here. You know what we're going to be doing. Let's just jump straight into the market, see what happened this week, and most importantly what we can expect for the upcoming one, because we're having some incredible developments, some volatilities finally starting to break in. So of course, let's see what we can do about it and how we can prepare for the week ahead. Let's start by having a look at the economic calendar to potentially try to frame our trading week. Monday, we don't have much. We have here an FOMC member speaking, but medium impact. Then on Tuesday, we also don't have any kind of important USD news. We have some GBP here. We have some CAD news. So if you're a CAD trader, then definitely watch out on Tuesday. This one as well, probably not going to bring in a lot of volatility. Wednesday, we have Mr. Powell speaking here, and we also have retail sales. So Wednesday looks like a pretty nice day. CPI for the pound as well. Some more CAD news. So it looks like we're going to have a volatile CAD week. So if you're trading like USD CAD or any other cross pairs, make sure to monitor these news. Then on Thursday, we have unemployment claims, which I believe is going to be very important right now because a lot is being talked about. Pretty much the unemployment rate of the US. Is this going to start increasing right now? Because of companies starting to do layoffs and stuff like this. So very important to monitor. And then we have an ECB press conference here. Ooh, euro interest rate dropping by another 25 basis points, which is quite nice. They really keep dropping the rate. That's amazing. It means that inflation within Europe is definitely being tamed, and we can pretty much see that within the price action of Euro USD. And then we have bank holiday on Friday. It's Good Friday, Easter. So yeah, looks like a pretty nice week. Mainly again, Wednesday and Thursday look like the volatile days. Monday and Tuesday, potentially we could get a little bit of a slowdown, the market pulling back, and then I would expect the market to really go crazy on Wednesday and Thursday. Well, not to go crazy, but to make the weekly move. Because again, like the market is always going to make one big weekly move, and it's usually going to happen on the days with the news. All right, just a little tip here. So let's jump into the charts and see what is going on. There are so many prop firms out there, but the one I prefer is FundedNext. First off, they have multiple plans, but my favorite is the Stellar plan because you actually get paid to pass your challenge, which is a huge incentive to treat it professionally. They offer a 95% profit split, and payouts hit your bank account in under 24 hours, or else you get paid $1,000. FundedNext offers competitive profit targets and crazy affordable pricing. Like for just $32, you can control $5,000 account on their Stellar Lite plan. It's crazy value, and they accept all payment methods: credit card, PayPal, even crypto. FundedNext is well established in the UAE with a strong reputation, rated 4.6 on Trustpilot with over 27k reviews. I trade with them, my community trades with them, and we love them. Now it's your turn. Use the link in the description plus code FANATICFN for 120% refund when you pass your challenge. Before we get started, make sure to join my free school community. It's an absolutely incredible, positive community with a lot of value from everybody. And the classroom here is a full course that I've never shared anywhere. So make sure to join. It's the first link in the description. Alright, as always, we're gonna get started with the DXY. And you know that I trade imbalances, and I want to show you something interesting on the yearly time frame, on the 12 months time frame. We're tapping into this yearly imbalance. All right, so is this going to cause the market right now to reverse? Probably not, right? Hard time frame imbalances like this, they don't respond like immediately. So for example, if you study it in the past, like there was, for example, a bearish one. It took a whole year for the market to pull back into it, and then pretty much it flushed the next year. Okay, here again we had an imbalance here on the yearly, and then we had an imbalance here as well. Like it took the market 1 year and then 2 years to react from it, but then you can see it still consolidate for 3 years, until it actually finally attacked the liquidity. Right, so not expecting too much, but it's just super interesting to see that this year it has been an absolute flush of the dollar, absolutely being devalued. So again, I'm super curious to see if this is going to continue. But yeah, overall, just keep in mind we're tapping into a very important level. Like again, does that mean we should go long? Absolutely not. Okay, like I would at least wait for the weekly time frame to start getting bullish from that yearly in order for me to start looking for any sort of longs. Because the monthly time frame, again, massively expanding right now. We're taking some major liquidity as well. So we're taking the previous yearly low This one here, so this is the 2024 low, and this one is the 2023 low, right? So we are taking some very major liquidity, and right now you can start thinking about pretty much traders and investors. What are they gonna do? Usually, kind of from what I know, there are a lot of institutions and stuff that like to buy the breakouts, right? And that is why oftentimes when the market breaks above like specific levels, you usually start getting a pullback or even a reversal. So imagine, for example, an institution here thought the market's gonna go higher on the dollar, and they take this long-term position on the breakout of these two levels here. Where's their stop loss? Well, potentially below the structure, right? And you can see how the market suffocated them very fast. So what is gonna be happening right now? Any buyers that have entered on this long move are gonna get stopped out, and their order is being turned into a sell. So we're either gonna get right now also a lot of sellers to enter that market. So there could be a little bit of a sell imbalance here, because if buyers get stopped out and new sellers entering, I definitely do see this one to potentially continue lower. However, it could also be that same scenario that I explained here. If a lot of people, if a lot of institutions and whatever like are entering shorts right now, thinking, oh right, the market is absolutely dumping right now, it's breaking below these levels, we're going down, right? We're going towards these levels. They're entering right now, their stop loss above, and I wouldn't be surprised if we do get, for example, another manipulation like this and the market to recover. But of course, that is extremely fundamentally based right now. The dollar is just weak. Trump is really freaking it out, right? So super interested to see how everything is going to develop. But overall, again, we're taking that liquidity, these massive liquidity levels, not the best spot, but overall, again, after the 3 week of consolidations, we had a very nice flush here the previous week, and then this week really did the damage. It also played out in an extremely shitty manner. So this is what I really dislike about the stock market right now. I honestly took my first trade this week on EU since a month, right? It was a profitable trade, luckily, but I didn't touch the market here from the 6th of March all the way like until you can see 1 month we didn't do anything. And then even on the weekly time, even on the daily time frame, right, you can see Friday pulls back, and then you have Monday kind of indecisive, Tuesday super indecisive, then Wednesday super indecisive, right? It's super hard on the lower time frames. And then suddenly Thursday comes in with the news, and then boom, the market flushes, and then Friday gaps down and continues to flush to attack the liquidity without really giving us any sort of a pullback to potentially enter, right? It has been super tricky, honestly, right? And it seems like the market is making moves, but it tends to make them at some random times, and you can be caught like unprepared, and you're like, God damn it, when did that move happen? And I'm not involved, right? So currently on the daily time frame, we are having this daily imbalance. That to me is looking pretty good, aligning, of course, with this zone to the left. You can, of course, take it from the low. This is your break and retest area, right? Order block, mitigation block, whatever I like to call it, right? And I would look for something like this for a continuation lower, just following that bearish momentum. Do we have something on the quality time frame? Well, not really. We have this one, but this one is perfectly also aligning within the area here of that daily imbalance. Here towards the bottom, we're starting to see some wicks, some profit taking, but the market still looks like it wants to drop. So two scenarios here. We either pull back, of course, into the daily, potentially Monday, Tuesday, pulling us back. That would be the ideal scenario. And then starting to see the shorts around Wednesday to Thursday, which is what usually is happening, right? If you study last week, there is Friday pretty much pulling us back. There is Monday pulling us back deeper. There is Tuesday consolidating. There is Wednesday starting to set it up, right? And then there is Thursday dumping it. So this is something that I expect could potentially happen this week. But if a lot of fear and pessimism remains in the market, I would be looking, for example, to form 4-hourly bearish imbalances down here. And of course, to continue attacking these liquidity lows, right? So if the market right now makes a new volatile imbalance here, expanding lower, then I will definitely follow that until it breaks. And then if it breaks, I'm going to start expecting the upside, okay? So I'm bearish on the dollar. Absolutely nothing is showing me bullishness right now. And of course, a lot of people are going to right now start looking for the reversal, thinking that we're taking liquidity, it's going to reverse, but the market can keep imbalancing lower simply because of that. When people think it's too low, the market keeps dropping lower until the maximum pain point when it actually starts to reverse. So again, keep following the flow, keep following the trend. Weekly, daily, hourly, everything is bearish. Let's stay short. The euro getting extremely strong. Right, we're also taking similar liquidity levels to the ones on the DXY. Here we don't have a yearly bearish imbalance, which is interesting. So Again, like, are we gonna continue going higher? Is this going to turn out at the end of the year that it was just a sweep? So something that we had here, for example, it looks very bearish. Suddenly it reverses. Right now it looks pretty bullish. Is it gonna reverse back down? Let's see. But of course, the point is we're taking that very important, massive monthly and even yearly high. You can say it's the previous year, and even so, this is the 2024 and this is the 2023, the yearly high. Now, of course, in the weekly time frame, we are massively expanding. There is a weekly imbalance, but this is definitely not something that I would look for it to be pulled back into, right, and to trade from it. So I will definitely immediately address the daily time frame, right? And then on the daily time frame, we also have this daily bullish imbalance here. This is a breakaway gap, so that is usually when the candle 3 is very strong and you don't expect for the market to be pulling back all the way down, although this is a very good area to be looking for longs. Now, of course, here we have another situation. If the market creates on Monday a new daily bullish imbalance, so if the candle here opens and it doesn't cross below this line, that is your invalidation line for an imbalance, then if it creates a new daily imbalance, then I would also definitely be looking for a pullback and a continuation higher following that overall bullish order flow. But if not, then I'm going to be looking for the lower one. And in the meantime, is there something on the hourly? No. Right, we had this one here, which the market expanded very early on that day. Kind of me and in my community, I kind of shouted here a long setup, but even I was late for it, and then nobody kind of took it because it was a very fast and really not a good risk to reward setup here. But I did take a long from here, right, and just very quickly for a 2-hour capitalized on that forward candle. Then it pulled back, and then it actually fulfilled my objectives from my previous weekly outlook. But again, it took all of that consolidation, and then the news, the CPI actually really popped it up. So currently there is absolutely nothing on the hourly time frame, so I'm not gonna say, all right, like it's gonna push up because I don't have a zone. Now, of course, if it really pushes up from here, creating a new hourly bullish imbalance, then I'm gonna be looking for it. Okay, but of course I'm gonna stay on the daily time frame right now, either pull us back into that daily or create a new daily. So that new daily can be created on Monday, right? So you're gonna be trading it on Tuesday, pull back in here, and then potentially continuation higher. Let's see, long bias on EU. Let's see how it plays out. GU has been an extremely shitty pair, just giving false signals. It's always against the overall bias. Like, I really had a tough time with it, and this is why I didn't touch it. So monthly time frame looks pretty bullish right now, but nothing to really extract. There are no levels to the left. So dropping onto the weekly time frame, like, look at this weekly price action here. Like, we had 4 absolutely crazy weeks, and then this week massively swept lower, tapping us into that weekly imbalance here and into that weekly order block, right? We were also coming from the very last weekly reaction area here, which is what caused that massive weekly rejection here. And right now it looks like we're going bullish, right? But it gave so many fake signals, right? Look at that crazy chop. The market massively manipulated higher, and then it just sold off, right? And at that time, I was honestly like, okay, well, I do believe this was the range. Then we had the manipulation, and then we started pretty much to build a downtrend. Okay, but of course the market gave that daily imbalance, it failed to hold from it. Okay, then it had also this one, but it kept breaking them. All right, and of course right now we can see who is in control, right? I'm no longer looking for like fibs here and 50% pullback and being short. Immediately when this imbalance failed here, I potentially knew that something was wrong. All right, and of course right now we can see the daily bullish imbalance has been created, very similar to EU. However, EU was way better than GU. Like, look at that massive flush on GU. Do we have it on EU? No, EU was in a very nice uptrend. Very strong currency right now. Pound gave us so many mixed signals. So many, right? At times it was looking like shorts, while EU was looking like longs, while the DXY is looking like this, while USD JPY was looking like that. We had a couple of days in the community where I was genuinely like not willing to touch the market just because the correlation made absolutely no sense, right? And it was all about throwing a bet, right? Whether USD JPY is gonna work short or GU is gonna work short, and it's usually they should be negatively correlated, right? It was crazy. Now, similar outlook here to the one on EU. We can potentially form a new daily imbalance, which is going to be very nice, potentially waiting for Monday to play out. And if we drop to the hourly time frame now, unlike EU, here we have a little bit of a hourly bullish imbalance that was tapped on Friday, and we're reacting a little bit from it. Now, again, am I just going to go on the Monday here and try to long it? No, I don't trade Mondays. especially Monday London session. Very rarely I will trade on a Monday New York if something is very clear, but Mondays I usually skip them. I definitely skip them, especially on Forex, right? Because I really want to see, I don't expect the move to happen on Monday, okay? So why would I trade it when it's a low probability day? So again, let's see how it's going to play out. Of course, let's see if that forward imbalance is going to hold, starting to push higher. Then, of course, we can catch like a higher trade from here, potentially driving us into that liquidity. But I would really love for the market to potentially pull back, consolidate, tap us into that daily, and then give us the long setup. So again, I'm going to stay long on GU right now simply because of this is what the most recent price action is telling me. But I would prefer EU all the way. It just somehow looks a lot better. It's trending. It doesn't have these crazy sweeps and stuff. It doesn't give me so many fake signals. I don't like GEO right now, but of course it could get better. I do believe we have some news for the pound as well next week. So let's see if it maybe starts moving properly. Aussie dollar and NZD dollar are also two pairs that I'm not touching simply because we have 3, even 4 choppy months right there. Like, look at these 4 monthly candles so far. They're absolutely crazy. Some big wicks, no commitment, no big bodies. This monthly candle right here is looking absolutely crazy, right? We were coming from this monthly zone here. So that's the monthly zone. The market broke down, so took the liquidity, but then of course below the liquidity, we didn't really follow through lower. We had this absolutely crazy bullish week, okay? So what I can say right now, I'm immediately flowing with the market because very likely if the market was gonna go bearish, it absolutely should have formed a weekly imbalance here. And probably in my previous outlook, I said like, this one is potentially creating a weekly bearish imbalance. Like it's very unlikely that the market is gonna make such a massive move, but there it is. There it is. Imbalance invalidated. Oops. This does not give me any bearish signals. So guess what? I'm going to long it, starting to target these liquidity points. And very likely we're also getting these similar daily bullish imbalances on that we have, for example, in EU and GU. We have that bearish one, but again, as the market is pulling back into it, it's already forming a bullish one, right? So what do you follow? Well, you tell me, right? What makes more sense? Who is currently in control? Daily bullish imbalances right now, again, very similar outlook here to EU and GU. We either wait for a new daily to form on Monday and then trade it on Tuesday, or we wait for a pullback into this imbalance here in this case, or we drop to the forward time frame to try to look for something, but we don't have anything here. All right, we don't have any. The last forward imbalance we got was here. That actually got tapped and did its job, but then since then it really didn't pop with volume going higher. So either again, like wait for that new daily imbalance to form somewhere here, hopefully it forms, and then of course look to trade it on Tuesday, Wednesday, or wait for the market to like continue expanding higher with new forward imbalances, and then you can potentially of course trade it higher. But I would say long bias simply because I'm kind of following the vibe of the market right now. This once again looks like a very nasty manipulation, right? So you have all of that crazy range, massive manipulation. Do you remember what I told you on the DXY, guys, on the yearly time frame, right? Who's entering below this level? All the breakout sellers. There's their stop loss here. Look at where the market. Look at how the market is suffocating them right now, not even giving them an opportunity to get out at break even potentially, right? So this is why I really do believe we are going to be going towards that high. So of course, long bias on AU. The question is, how are we going to get in? Well, of course, that is based on your trading plan. I'm waiting for zones to get tapped and then potentially to trade it higher. Let's have a look at NZUSD. So pretty similar to the Aussie, massive sweep down and already taking out the highs. So if we have a look at the weekly time frame, like look at that. Like why would you trade a pair like this? This is absolutely crazy. It is consolidating on the weekly time frame. That is a very big red flag because the daily time frame is going to be crazy and then your 4-hourly time frame is also going to be crazy. Like it's crazy. So let's drop that quickly, this monthly imbalance, to just see where we are at. We tapped it, we fulfilled, and then right now we are, damn, this is confusing me with all these wicks. It first wicked up, then it wicked up again, then it wicked down, and then right now we are, yeah, we're pretty much targeting this high. And then of course after that high, we're gonna have to target this one here. Absolutely crazy price action here, look at that. So yeah, very similar to Aussie dollar. We had like this very massive breakout here. Again, what is happening below this level, right? So any buyers get stopped out, turning into sellers, new sellers potentially also enter the market. And then of course the big guys are trapping them all, right? And they don't give them any chance to even exit their position because the market just massively rallied, and they're currently about to attack their stop loss up here. And then of course we have a daily bullish imbalance that is looking pretty good. Very similar, guys. We're having a very similar kind of setups across all the majors. It is that very nice daily bullish imbalance, which is a breakaway gap. So we have two situations. You either wait for Monday to pass to form a new daily imbalance, right, and then trade from it, or you drop to like a 4-hourly time frame or a 1-hourly time frame trying to trade it higher, which is risky for me on a Monday. I wouldn't really touch these pairs on a Monday. And of course, do we have something on the 4-hourly time frame here to work with? For me, no. That's how I trade. If I don't have anything clear on the daily and the 4-hourly, I don't touch it. And this is why I have a 70% plus win rate, right? Because I don't get involved in the lower time frames if I don't have these two key time frames to really show me where the market is going. And of course, having a zone that is tapped on these two time frames. So currently, we have only this daily zone. There is nothing on the 4-hourly. So I either wait for a new daily to form, tap and go higher, or for that lower daily to tap, of course, and go higher from there. So very simple again, long bias on NZD/USD, following that overall vibe of the market. Let's see if it plays out. And of course, as we take out the liquidity, for example, on AU, on NU, and of course on all these other pairs that we're looking for these liquidity levels, you have to be really careful to identify, all right, so are we going to be getting trapping right now the buyers and starting to reverse back down, or are we going to start closing above these levels, making imbalances above these levels, and then of course that is going to confirm that we could potentially continue higher. All right, so very key things to observe. I am genuinely a little bit irritated for gold because it offered an absolutely incredible hard time frame setup this week. Look at the monthly candle, absolutely expanding. And if you remember from last week, we have outlined that weekly bullish imbalance, and gold does not very often pull back to weekly imbalances, right? We had one right here, and then since then we had all of that crazy move, and then right now we have one here. But this was extremely fast, like a lot of money flew into gold again suddenly with all the uncertainty, and this one just stopped and absolutely rallied right now. So it was unfortunate because honestly, like we had a webinar on Thursday with my team, and based on our strategy, right, based on how we trade, there was like one setup that we could have, there were pretty much our main setups were from the bottom here, like trying to swing trade it, right? So looking for that shift of structure here with an imbalance, and then we can potentially enter a swing trade from here. But then after that, the market just didn't offer any pullbacks. Just one 4-hourly candle here pushed, one 4-hourly candle here pushed, right? One little here pushed, right? No 4-hourly pullbacks. Not even any 1-hourly, like there were a couple of 1-hourly pullbacks, but they were done in a very shitty time, right? Which we couldn't have traded, like Asia or something. So I'm very pissed that I didn't catch gold longs, honestly. So I hope you guys did based on how you trade, but currently we're having, every single day we're making breakaway gaps. There we go. We're taking all-time highs, so the market might want to stabilize a little bit and give us a pullback. But very similar setup, of course, to the rest. Here we might form another daily imbalance after Monday closes. And then, of course, any sort of pullbacks into these levels here could, of course, send us higher. Because, again, gold, I mean, it's just going higher like crazy. And until that uncertainty stops, gold is going to go higher, right? So it's a very nice, fundamental, safe haven asset right now. The US dollar is really losing its qualities of being a safe haven asset, especially under Trump right now. Money is absolutely flowing out of the dollar, and you can see it's very clearly entering into gold, right? I really wish I bought some physical gold or gold ETFs or something like this, because I've been looking at this uptrend, right? But somehow I was only focused on stocks, not really looking to diversify. That's probably a mistake for me, but that's that, right? I'm going to be looking for daily imbalances to get pulled back into, because right now we're taking liquidity. It does look objectively a little bit extended. I know gold, for example, works very good with pips. Like if you're looking to potentially forecast like some sort of a target, you can take like a swing level like that and plot a fib, for example, and you can be looking like at the 27 extension here, which is 32, 58, and then of course even the upper one. So this is kind of a little target here only based on fibs. Why? Well, because currently what you can do is you can only look at extensions, right? Or you can even do something like this, like an opposing extension. 27 is tapped, 62 could be the next target, and then we can expect a pullback because we're trading in no man's land. and you can try to kind of replicate or forecast some sort of a top, but of course just listen to price action and what it tells you. Hopefully we get some sort of a pullback, higher low on the daily, and then to potentially continue going higher. Let's have a look at USD yen. Yen being again another safe haven currency. It is depreciating against, it's appreciating against the dollar. The dollar falling right now, money could potentially be flowing more into the yen, and we can see that USD JPY is very nicely going lower. This one here looks like a pretty nice next target. We have, of course, that monthly bearish imbalance, but as we have seen, the market did not want to pull back into it. It just flushed without it. And then dropping onto the weekly time frame, we're having a weekly breakaway gap. So again, what does that mean? It means that we're not going to be looking for the market to pull back here and then to flush, because it wouldn't make any sense. Why would the market make like a 500 pips pullback in order to then flush from there? It doesn't make sense, right? It's not efficient. So if we're going to be starting to target, let's even drop this one, a little bit of an intermediate one. Did this one get tapped? Looks equals or not? Oh, sorry, I didn't draw it correctly. There it is. Yep. So we have these two intermediate kind of, well, no, this one is the intermediate. This one is the major low. This is something that we don't expect. So we really have to refer to the daily time frame. Now, look at that once again. Like, this is how we've been getting the setups overall. Like, look at that daily time frame. Comes in, out, takes out the low, massive push, and then like you're like, what the hell is going on? There was a beautiful short here. I only got one member of the community take a short here, right? It was from this daily zone, from a 1 hourly confirmation, and then it very nicely went lower. But I was super uncertain on that one, and then again, massively pushing up, like, okay, what is going on? It took out here the liquidity, tricked sellers into the market, it stopped them out, tricked buyers into the market, right? And then it flushed. Absolutely crazy. So currently we don't have anything on the daily, by the way. So we don't have a daily bearish imbalance. I would definitely have loved to have that, which means that I have to refer to the 4 hour, and the 4 hour is also not giving me anything. If not, it's giving me a little bit of a bullish here. So honestly, based on my edge right now, I don't have a short setup. There are no zones. This is here an old one, but I don't trade old ones. I trade what is happening right now. So how I see this is if something new on the daily gets created. So if we, for example, here have a daily bearish imbalance somehow, because the rejection here looks pretty good, pretty big. And if the market pulls back just briefly to like close that potential gap, that would invalidate a new daily bearish imbalance. So it wouldn't form. The 4 hour time frame giving us that very sharp, but this one is probably just profit taking, right? After that very massive sell-off. So you gotta trade the failure. So I'm getting a bit advanced here, but you have to trade the failure of that 4 hour zone, right? It's probably gonna react and then break and then give you something here, right? And then that is your only opportunity to potentially trade towards the lows right now. Or if you want to keep it simple, wait for something new to be created, right? And then of course, try to trade it lower. Now, if it starts pulling all the way back up, you just have to flow with it, okay? Because if it starts making some bullish structure once again, you just have to wait for it to shift down. Like, so for example, here, when the market was at a lower low, right? We don't know what's going to happen. Is it going to continue pushing lower? Is it going to start pulling back? It starts pulling back, bullish structure, then what you simply have to do is for the market to flip, and you're going to catch your trade somewhere within here, okay? Patience, guys. It's all that game is all about. No forecasts, no trying to guess very hard where the market is going. Just observe the market, and it's literally gonna tell you all you need to know. Okay, so that's USD JPY. Kind of too many scenarios here, but of course we just have to wait for the market to open. Let's see how it develops, and then of course we're gonna strike. But I would say I'm definitely bearish on USD JPY, of course, based on fundamentals and based on price action. So if I do get any short setups during this week, USD JPY could be a good opportunity as well. Let's have a quick look at the other JPY. So EJ monthly time frame, we are just about to take the previous monthly high where we already took it. I'm not sure. Weekly time frame, oh no, yeah, this one kind of looks like equals. Gap down, massively moving up. Why is this moving up? Because of the euro. Because the euro is super strong right now, and we're also tapping into that weekly imbalance. Very massive push up on euro yen. Daily time frame absolutely chopped up. So again, that massive push up happened on Monday. So it gapped down, it filled the gap, and then chop, 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 and then Friday kind of popped a little bit higher here, dropping onto the 4 hourly time frame. Like, look at that. What the hell, right? So we're opened, massively pushed down, and then we gapped. Whoa. So we opened, gap down, massive candle down, and then we gap up suddenly, all the way up, push up, all the way down. Like, this is some crazy price action here. We have that forward imbalance, but look at this, guys. Like, this is not, I would never touch this. Like, is this momentum? No. How do I define momentum? Imbalances. Like, do you have anything bearish here? There is no momentum. Do you have anything bullish here? There is no momentum, right? The only thing we had here was this imbalance, right? And this one ended up holding, but look at what is happening afterwards. This here, Euro JPY and GBP JPY are not logically good pairs to be traded right now. Why? Because Euro USD is going up. That makes the Euro strong. But USD JPY is going down. That makes, of course, this Japanese yen, quote currency, also down. Okay, so if EU is up and this one is down, what happens to EJ? It's gonna go sideways, because in order for EJ to move, Euro USD has to be up and USD JPY has to be up, but that rarely happens. All right, this is why I really dislike these cross pairs here, because they always have that conflict of interest, and you're usually gonna be getting super slow price action. So I can say I'm bullish on that one. Sure, targeting these equal highs here. If you get some sort of a quality zone to go there, definitely. But I just honestly think I really have a big desire to stop analyzing these two, but you guys keep asking for it, so I'm gonna keep doing it. But again, this is absolutely not something that I would touch, just so you know. But bullish bias, let's see if it takes out that high. And checking out GJ, right? So look at EJ. EJ is printing a bullish candle. GJ is printing a bearish candle. Should they be correlated, right? USD JPY is down. GBP USD is up, right? So GJ is not gonna do much. So dropping onto the weekly time frame, you can see a pretty choppy week. We're printing a weekly bearish imbalance here. Meanwhile, Euro Yen is responding from a bullish one and it's rocketing higher, right? We're taking liquidity here, so let's see the daily time frame. And like, why would you, like, I'm so irritated on this, right? So, and I don't know why I keep analyzing. I'm probably just gonna stop, right? And they're probably just a couple of you guys just trying to trade this. And let me know if you're actually having any success with trading currencies like this. Like, look at that. Monday open chop, Tuesday chop, Wednesday took out the high bullish, then Thursday suddenly bearish, then Friday absolute chop. Like, how do you trade this? So currently we're having that weekly bearish imbalance. There is also daily bearish imbalance here. This looks like a pretty nice short area. But again, in order for this currency to work, GBP USD has to go down and USD JPY has to go down as well, right? But there is always going to be a difference between these two because they're negatively correlated, right? And of course, if they are, then you're going to get choppy price action on GBP yen. So that's my outlook on that one. Like, the forward time frame, absolutely crazy choppiness. Moved up, pulls back. It's not moving up. You can see, for example, because the pound in that case is not as strong as the euro, right? You can see that this one failed to follow through, but because the euro is a bit stronger, this one printed that forwardly, and of course it ended up going higher. All right, but it went higher in the choppiest manners. So this is GJ. Like, I have absolutely no idea what is going to happen on this one, and I also don't have any desire to know, right? So good luck to you guys trading these pairs. I would say, I'm based on the technicals, I'm bearish, but I'm going to be looking for a pullback into these zones. But until then, of course, everything can change. So let's see. All right, welcome to the futures chapter. We're going to get started with the S&P. So we are having a very large dip right here. And of course, there are a couple of things to be mentioned about this week. Trump pausing, giving a 90-day pause to the countries that are not retaliating against his tariffs, of course, and they're willing to do some trade talks, of course, to achieve a deal. That was met with a lot of positivity from the market, but as we saw in the next 2 days, the market kind of consolidated because still uncertainty remains very high. There is a lot of talk about recession, of course, incoming. There is a lot of talk about inflation increasing. Okay, which means that the Fed are not gonna cut the rates, right? Which should be bullish for the dollar, but the dollar still plunged. We have a lot of development within the bonds, right? And the bond yield, which Trump wanted to bring back down, right? But it actually went back up. So there are a lot of crazy things happening right now. In terms of the technicals, so we are kind of currently in some pretty nice buying areas, like especially if you're investing in stocks. I did a video on stock investments if you guys want to check it out. But we tapped, for example, into this very last monthly bullish imbalance, and of course the next potential liquidity target is going to be this low. And you can see we kind of recovered here from the bottom. We recovered 10%, all right? And that recovery was mainly made this week, of course, because of that news announcement. Now, is this a lower high pullback for us to flush lower, or is this the bottom, right? That is the very big question. I personally, if you check out my stock investing video, I walked you through SPX and all my buying levels, and of course what I expect to happen. I do believe we have one more drop to 4,700 here, and maybe a little bit lower. So 45 to 47 is going to be a very big buy and reversal area. But of course, the question is, are we going to drop there? We're having a weekly bearish imbalance right now. And also, if you have a look at it, this overall region here is a very large supply. Okay, so if the market starts breaking above that supply, that is when we're actually going to be having a higher high formation. Okay, and that could very easily expose the all-time highs. However, that is going to be very fundamentally driven. And I do believe right now within the next... within the next 90 days, but I think it's probably gonna happen faster. We're gonna start getting a little news here and there. So for example, Trump reached the deal with Iran. Trump reached the deal with the EU. Trump reached the deal with this country, with that country, right? And that is very slowly, if it's positive, of course, that is very slowly going to bring a little bit more certainty to the market, right? And of course, it's gonna go higher. Now, currently in terms of the daily time frame, it has been a little bit tricky. So we saw Monday here a little bit of a consolidation, Tuesday also a little bit of a consolidation. There is the Trump news, the market moving 13% in one day, which is crazy. The next day we sold off, which is probably some profit taking after that massive push. But if you put a fib from the low to the high, right, the market literally pulled back into here. Wow, we can't even see this, but into the 50% and into the 618, which is your kind of golden pocket here, right? And we can see that on Friday it kind of gave a little bit of a recovery. So uncertainty is too high, right? And of course, if you look at technicals currently, we don't have much to work on the daily time frame. So we have this daily bearish imbalance that the market tapped into. This also caused was another cause for the market to drop a little bit. But as this reaction is right now absorbed, I'm very curious to see. My first target is going to be that weekly imbalance, and of course that high, because here also we have this overall level sitting, these three buy candles. This is a very strong supply area, right? So as we start getting towards this area, very curious to see if we're going to start falling lower or if we're going to start breaking it. Now, of course, on the quality time frame, what I like is of course the massive push here and the corrective nature of the pullback. It was not a very large sell-off to really kind of start trapping people, because again, if you think about that breakout scenario that I explained on the DXY, if there are buyers, for example, doing breakout here and placing their stop loss, the market should not even offer them a chance to go into profit. It went, retested their entry, and it's still falling, right? If the market was going to reverse, it should have done it already. It should have flushed like this, not really offering them any chance to exit, suffocating them until their stop loss is hit. But we see a very nice push, a very nice pullback. Again, a very nice fib here pullback. I bought some stocks, but actually bought them a little bit higher here. So I had to suffer like on the S&P a 5% drop, which I could have definitely gotten a better entry in terms of the technicals, but that's okay, all right? And currently on the quality time frame, we have this very little forward imbalance, but how I trade indices is I'm scalping them. I'm not day trading or swing trading them. I could say I'm more day trading them, right? But more towards scalping. So of course, I'm always gonna be looking at the 1 hourly time frame and the relationship between Asia and London and how the market opens. So of course, if we start trading higher a little bit, I would be looking for my first target to be that weekly imbalance. And then from there, right, it's gonna be big attention. Okay, are we gonna consolidate? Are we gonna start reversing? Are we gonna start breaking it? This is outside of my control. Okay, but for now, I would say I'm more bullish. There is some optimism into the market. Still a lot of uncertainties being kind of thrown into the news outlets, right? News of recession, news of the US economy slowing down, news of this, news of that. But of course, price is what pays. Price is going to tell us what is happening. So I'm currently long until the market starts reversing, printing folly bearish price action. And then of course, if it does, I'm going to start targeting the bottom and start expecting my next objective of 4,700. So let's see, long bias for now. Nasdaq, pretty much the same. They move in tandem. Here we're tapping into that very last monthly imbalance as well. We came very close to the liquidity, but we did not take it. Now this is also going to form a monthly bearish imbalance here, which is going to be a very big struggle area if the market is going to try to attempt again the all-time highs. Now, as you can see on Nasdaq, we do not have a weekly bearish imbalance. I look at ES, we have it. NQ, no. YM, yes. Okay, so what is this showing us is that NQ is actually a little bit stronger than ES. So that means tech companies are starting to gain a little bit of ground. And the move here was almost 18%, which is absolutely nice and crazy. Currently, we're already tapping into that supply level here. And we already absorbed the reaction from it. So we tapped it, absorbed, pulled back. Around there, we can see Friday is already kind of, it's an inside bar. So that doesn't mean much yet. But if we start kind of breaking and closing above that level, that will give me a bit more confidence, for example, to start going for next levels like this. Now, I'm still super uncertain to be calling the bottom. This is really, guys, not calling the bottom, right? I'm just following the price action right now, the candle anatomy, and of course the order flow. It is starting to give us a little bit more bullish signal. The 4-hourly time frame for the first time, like here we had a little bit of a, but yeah, this one was very corrective. Like here we had a high, a higher low as well. So we have that market structure shift pattern, right? A break of structure here as well, and the market pulling back into discount, and right now starting to very slowly kind of make its way up, but it's still very corrective. This price action here is very uncertain, okay? So the weekend, something could happen in the weekend, like a negative news. I'm not gonna be surprised if the market gaps here, right? And then it just starts reversing to reach the liquidity points, okay? So absolutely monitor the news, have no expectation, especially of the stock market right now, all right? And just follow price. I would say currently I am a little bit more bullish, okay? I hate to say it because we're in a bear market, but I am a little bit more bullish. I don't see a lot of buyers entering here. So pretty much Thursday to Friday. Friday was an extremely choppy day. I'm super happy I didn't trade on Friday because it was an absolute disaster. But overall, it gave us like a little bit more bullishness, not that much. But if we start, for example, very slowly climbing higher towards that liquidity point, I think that could be a very nice intra-week setup. Just target that high here. And then, of course, what happens afterwards? Are we going to start closing above it, then attacking the next liquidity target, right? Are we going to start sweeping it and reversing? That is, of course, outside of my control. So we trade what is in front of us right now, which is a relatively bullish price action. Again, taking it from this low to that high. Let's see if we at least take out that high. And then, of course, what happens afterwards? As I said, we got to flow with the market. US 30, pretty similar development, taking a little bit of liquidity, tapping into old imbalances, and we have been right now 3 months in kind of that dip. Now here, this was basically a very nice downtrend. That was just an economic slowdown, and of course suffering the consequences of the interest rates. But if we have a look at COVID, right, exactly 3 months before we found the bottom. If you look at the 2018 tariff war again, like 1, 2, 3. Yeah, pretty much again 3 weeks of a pullback before we found the bottom. Like if you study other quick kind of flushes like this where things are looking pretty bleak, right? The market does tend to find the bottom. That was a very nice significant drop. Well, not significant. 20% is not much, right? You can see the previous tariff war dropped also 18%. Then COVID was a big hit, right, of 35. But COVID had that was a lot more scary, right? Not gonna lie. So currently, again, we're having that very large rejection. Now, when it comes to US 30, we're also having that weekly imbalance. So there is gonna be a lot of supply within that area. Daily time frame again popped up, pulled back Friday, giving us a little bit more of a bullishness, but it's still an inside bar, right? So which side is gonna get taken? I do believe the high here is a very high chance of being taken because it's also sitting within that weekly imbalance. That is gonna be a very key area for traders to anticipate. And then of course we have that hourly bullish imbalance here, pairing it with that little sell to buy here. So yeah, this to me overall for indices, we're also reacting from this one, absorbing the reaction. So for indices, I do feel like we could have an overall bullish start, But of course, guys, right, if something during the weekend happens, if Trump gives some bad news, the market's gonna drop because it's very sensitive right now to him. And I don't like this because basically it's not moving based on what the companies are valued, right, and what the companies are doing, because there are so many companies that are absolutely profitable, absolutely amazing, with great ratios, with absolutely everything, right? But just because of these tariffs right now and because of the overall fear and greed of investors, they are dropping like crazy, right? I don't like that the market is moving so in such a volatile manner, just like by a tweet or by a little announcement like this. But of course, we gotta do what we gotta do. This is the setup for YM. Let's see. After we tap into that weekly imbalance, we gotta just focus, read what is gonna happen, and of course, follow the news. I'm happy to see that DAX is also giving us a little bit of a dip here, 20% almost. It didn't really touch the 20%, especially on that broker. So DAX again, it's you can check multiple brokers to see what they're doing. But we also just came on the brink of taking that liquidity. I think it formed. Oh no, it actually took it, which is amazing. And we're rejecting right now very violently again based on that positive news. But of course, similarly here we have that weekly bearish imbalance that the market could potentially tap in and encounter some supply. On the daily time frame, again, we had the bottom, the market popped on the news, pulls back again, and again, Friday gives us a little bit of uncertainty here as well. And then we drop to the 4-hourly time frame. This one had this bearish imbalance that it actually pinged, reacted, and right now it's trying to push up. So for DAX, I would really love to see some bullish, a bullish 4-hourly imbalance and a bullish break of structure above that high. Okay, so something like this, pull back, and then potentially it can guide us into that weekly imbalance. That is definitely a setup that I would love to see, to really confirm that, for example, the market is reacting, that this is going to be a higher low, because so far on all indices, it's not really confirmed, right? It's kind of forming, it's kind of starting to move up a little bit, but it still looks a little bit uncertain. I still feel like it could be a trap and the market could definitely drop, okay? So if we're looking to go long on DAX, definitely wait for a very strong closure above that high, and you can then even look for the retest and a continuation higher towards that weekly imbalance. That will be my DAX setup, but of course, guys, right, so just always keep an open mind. This is why I always give you usually two scenarios. Currently, I'm kind of a little bit more one-sided, which is not good. I kind of recognize this. I've received criticisms that I kind of always give scenarios and I'm never certain of the market, and usually a person who comments this really doesn't know what trading is about, right? But again, you have to be open-minded, because if this market opens and prints like a bearish imbalance, break structure below, then guess what? I'm going for this low, because that's what the current order flow and that's what the market is showing me right now. Okay, so stay open-minded, always expect anything from the market and keep flowing with it. So to recap, the overall vibe of the market right now is short biased on the DXY, looking for daily imbalances to form on Monday and then potentially trade it short on Tuesday, Wednesday, Thursday. All right, that's the plan. Now, of course, you can look at the 4-hourly time frame if you wish, but for example, shorts on the DXY, longs on EU. Hopefully that Monday forms us a daily bullish imbalance that we can trade from. That would be amazing. My favorite one is EU, because GU is kind of funky. It had that massive sell-off. The GBP as a currency is not as strong as the euro, and the euro is going to be cutting the rate. That is negative for the currency. So let's see also how that is going to impact the euro market. We might enter into a bearish week this week. Who knows, right? Aussie dollar and NZD dollar, not my favorite, but they're kind of offering a very nice manipulation setup right here with a very kind of easy target. This high on the Aussie dollar, and of course that high on NZD dollar. So if you do get some sort of a daily imbalances or 4-hourly bullish imbalances to trade from, that could be nice. Gold all-time highs once again. I will be looking for daily imbalances on gold, so a little bit of a pullback to potentially retest the old all-time highs and then to give us a new leg higher. If of course we're still getting that uncertainty, if the dollar of course keeps falling, gold is just going to keep increasing in value. USD JPY is also very nicely short biased, simply because of fundamentals, the DXY declining and the JPY potentially appreciating, making USD JPY go down. We don't have any zones on that one, so I kind of gave you a detailed outlook of what I will be looking for, so make sure to watch the full USD JPY outlook, but overall sell bias. Euro yen and GBP yen, this is those are two pairs that I would absolutely not touch, even if you ask me to do. Very choppy. There are differences between EU, GU, and of course the other main one, which is the USD JPY. I'm bullish on Euro Yen because the Euro is bullish, and of course GBP Yen looks like bearish, but the pound is starting to recover, so I don't think it's probably gonna, I don't know. We can reach towards these zones here, but then of course, are we gonna flush after that? We gotta wait and see. Indices are giving us a little bit of a brink of hope. The key question is this the bottom? Are we gonna drop once more? I'm very 50-50 on that. I do expect that it could drop once more, especially if some negative news come into the market. Currently, we have pulled back 50% from that tariff polls news. We pulled back 50% on Thursday, and then Friday tried to give us a little bit of a pop, but it was just still very uncertain. Like, investors are not still buying the market very aggressively, right? And that is the case pretty much across all the indices. Okay, so I'm going to be looking to see a little bit more confirmation as the market opens. If it starts trending higher, right, I will definitely be looking to start targeting some of the highs here. The ES and YM have a weekly bearish imbalance that is going to offer a lot of supply there, so you got to be careful. Very similar with DAX as well, giving us a little bit of a bullishness. But of course, read the news during the weekend. If there is something negative happening, if Trump doesn't reach an agreement with some of the countries, or there are more conflicts, or if the war intensifies with China, of course, that could be perceived again pretty negative, so the market could drop. But if China and the US reach a deal, I think that is going to be the catalyst for the market resuming once again towards new all-time highs, because that is pretty much what the market is all about right now, these tariff wars. So if we do get the positive news for a positive outcome of the tariff war, then the market is just slowly gonna start climbing higher. So make sure to be always reading some financial articles, and of course those very breaking news, right? So that's for me, guys. Let me know how you performed this week. Let me know what is your favorite setup going into the incoming week. Any questions, let me know in the comments. I wish you good luck next week. Trade safe, of course, flow with the markets, and I'm gonna update you on the next video.